Welcome to X-Enabler Audios, the podcast where we delve into all things tech, Web 2 and Web 3. Join your hosts Belinda Agnew and Prashant Garmi as they explore the latest developments in the tech world, discuss emerging trends and chat with industry experts. X-Enabler is a game changer the industry has been waiting for, offering flat-rate software development without the hefty fees. With our revolutionary subscription-based model, you can access all your development needs in one easy subscription. Visit our website, xenabler.digital. Now, your hosts Belinda and Prashant.
Than myself. So I'll quickly just jump in. Jacob, if you want to start, just tell everybody in the audience listening what you are currently doing within your company, what's your current title, and just give them a quick bio of yourself.
Perfect. So I'm Jacob Parker, founder at Fiscal. We are an open finance API platform that allows businesses to access real-time data from, say, banks or energy retailers. And then previously, before that, I've been a smart contract developer and involved in founding blockchain-based businesses.
Awesome. Thanks for the intro. Stu, did you want to go next and give the audience a quick introduction of yourself?
Yeah, sure. Stuart Stoyan. I am the former founder and CEO of a company called Moneyplace, a personal lender that I exited in 2021. Over the last sort of 18 months or so since then, primarily investor in mostly fintech, but some fintech adjacent businesses in Australia, Southeast Asia and the UK. Also sit now on several boards and advisory boards, again, mostly in the fintech space, but not exclusively in the fintech space, and am chair of Pathways Digital, a workflow management company.
Perfect. Thank you. Daniel, did you want to jump in and give the audience a quick bio?
Yeah, thanks, Belinda. Thanks for having me. It's my first LinkedIn audio, actually, so I'm still getting used to the logistics. But yeah, I'm Daniel. I'm in AWS startups, so focused on fintech. So work with fintech companies, leverage in terms of leveraging the best out of the cloud. Prior to that, I was a CTO in the superannuation and wealth management industry, and I've been around in the kind of startup space, and passionate about Web3 as well. So
awesome. Thank you so much, guys, for the quick introduction. So I guess let's just maybe start off the topic, which is the future of payments. I'd like to get an insight of, the current fintech banking systems and what's happening internally. You guys obviously see much more than we see. Where do you think the future of payments is going? Like, for an example, the emerging technologies such as blockchain, everybody's talking about this is going to shape the future of payments in the fintech space. What's your thoughts about that? And anybody can unmic themselves and jump in.
My take would probably be around, I guess on the payment side, there's quite a variety of technologies and potentially even distribution strategies from different businesses. And probably the future there is more of a multi-rail type future. I think blockchain, and particularly stable coins and DCs will be part of that, but you also have Venmo, Klarna, Cash App as equal disruptors on their own right through consumer distribution. There's also then real-time payment networks, Australia MPP, Pay2, and then real-time payment networks popping up globally with UPI, particularly successful in India. And then there's also open banking and data sharing around that, and in UK particularly having different disruption on the payment lens.
I think just building on that, I agree with Jake. I think there's a bunch of things that are going on that are primarily around making payments more accessible and more efficient. If you jump back, not even 10 years ago, 5 years ago, a lot of friction, a lot of expense in being able to make payments. Why is it would take a day or two to transfer money to somebody? Why is it might cost you 5, 6, 7% to transfer money overseas? And so what you're seeing now is a bunch of different solutions that are coming in that are enabling faster, cheaper payments so that you can access your money and give your money away to other people in a much, much more frictionless manner. What's really interesting is in the last day or two, there's now some pushback from big four banks in Australia. They're saying, whoa, hang on, maybe this is now going too fast. And so maybe we need to slow this down and put some friction back in. And that gets to a sort of a separate conversation for motivations there. But overall, the direction of where we're headed is fantastic and really gets to empowering, enabling people to be able to move their money around, as they should be able to see fit for as little cost as possible.
And Daniel, where's your head at in the space of this emerging technology, blockchain, within the fintech space specifically?
Yeah, I think blockchain is an emerging technology, but should be really considered with other sort of technologies. I agree with Stu and Jacob. Even in the Web2 space, there's a lot of modernization going on. Companies are looking to kind of make payments as efficient as possible. There's obviously a big array of challenges to solve, from kind of cross-border payments to sort of the last mile payments. Like if you look at Australia, domestic payments or retail payments, seems pretty good. Consumers can kind of transfer each other instantly now with PayID, with the new kind of PayID payment rail. But then if you look at institutional, for example, there might be additional challenges there to kind of settle, reconcile, move money around. So yeah, it really depends on kind of what challenges you're looking to solve. But yeah, I just see blockchain as kind of one tool out of many to sort of solve some of the challenges.
Yeah, I agree. There's so many tools. Blockchain is kind of one of the things that everybody's talking about, since the big collapse with the Silicon Valley and the bank there and everything that's been happening in the space, right? Everybody's talking about how can we make the banking system a lot better. How do you think the the challenges and the opportunities, there's so much in that, but where do you think the banks are at with adopting this type of technology, or let's just say technologies within the space of fintech? Where do you see this happening and going?
I think just on that, before answering your question, just on Silicon Valley Bank, what was interesting there was that there was a logjam of orders for people trying to get their money out of the bank. And that points to the inefficiency of the way that bank transfers were being processed. Some of that gets to the dollar amounts that are being transferred. Some of it gets to the processes that were being used by SVB. But if there was ever a reason to be able to help sort of accelerate and empower people's ability to move their money around, it's a bank run where you're stuck in a queue. And there are then financial consequences for that. But to sort of come back to your question of banks embracing, I think it depends on who you talk to in the bank. There are some parts of banks, and focusing on Australia and focusing on Big Four, that are very, very much about we need faster, more efficient technology that enables us to be able to run smoother, better payments systems, more holistically. And then, as sort of touched on before, then you get the guys in fraud that are saying, well, hang on, there are some customers getting scammed here because we enable, immediate transfer of funds from one account to another. What can we put in place to slow that down? And so there's going to be this tension that we go of sort of, 2 steps forward, 1 step back, as the major banks are trying to figure out what it is that they want and what outcomes that they're looking for. Ultimately, it's probably going to be consumer and customer led of, individual consumers, individual businesses saying, no, we actually want this technology. We want the ability to be able to do this. Now, whether that is through MPP, whether that is moving to, blockchain type platforms, whether it's moving to international FX platforms that enable you to then move money around much more easily as well. It's going to be unfortunately consumer led, and then I think the banks are going to reluctantly be playing a bit of catch up to meet that consumer demand.
That's an interesting view around that. And if I can dig a little bit further there, a lot of the time we talk about how a particular technology will change fintech or will change whatever the sector is. But when it comes to fintech, what is your understanding in terms of what area actually needs fixing like immediately and needs to happen now?
If you go back to first principles and just look at the overall level of profitability that exists in banking globally, but especially so in Australia, there is a significant amount of profitability that exists in the big four banks, that exists in providing products and services in retail banking, but also in business banking and other sort of aspects. It's competitive, but it's not really competitive. You go to a different bank for a change in a possible price change or sort of more favourable terms. Sometimes there's a service aspect to it, but more broadly, it's kind of like NAB, CBA, Westpac, ANZ, okay, whichever's offering the best deal of the day. So what that then sort of gets to is, how do you then drive competitiveness in it? And what do you do to erode some of those margins and some of those profit pools? And that's where fintechs have made a massive inroad over the last 10 years. We saw initially, some lending businesses that came to market. We've seen some things happen in sort of wealth management. We're seeing payments as a real focus now that are, from a bank perspective, eroding profit margins, but from a broader economy perspective, are providing a fairer, cheaper, better overall service to the end customer. And so it's almost as if banks sit there as a very much almost a recalcitrant sort of incumbent that are reluctant to give up any of that profit pool, but will do so begrudgingly if and when they're pushed by a viable competitor or a viable threat that's coming through from fintech. And that's sort of where you're seeing, to use just mortgages as an example, a company like Athena that has come out and said, so in mortgages, there's a concept of a front book and a back book. Front book is your new clients, back book is your old clients. Typically, if you've been with the bank for more than a year or two, new customers are getting a better interest rate than what you're paying on your mortgage. Athena said, well, we're going to do away with that concept. If you're a customer of ours, you just get our best interest rate. If we change the rate for our new customers, we're changing it for all of our customers. And this is a real big sort of threat to the way of thinking of the incumbent major banks, but also some of the mutuals and regional banks around. We make a massive ton of money off of our existing customers, and we're very competitive for new customers. But it's a fintech that's challenged that ethos, that way of thinking that says you can sort of profiteer off of your existing customer base. And so I think that's but one example of many that we're seeing in fintech, where fintechs are leading the way on saying this business model is a little bit out of date. It's a bit redundant. We should be able to do things differently. And the banks will then reluctantly come forward. So you're seeing sharper pricing from banks for existing customers. You're seeing proactive outreaches to existing customers before they come up for renewal, before they come up for a repricing event. And that's off the back of fintechs providing a viable threat.
Yeah, I think that's that classic sort of quote around incumbents must innovate before innovators find that distribution. And you've really seen that in the States with some pretty significantly large fintechs, and also in Australia, Athena is a great example. Here you might have CBA as an example of attacking a little bit more aggressively on the tech side, but it's just an eventual wave that keeps coming.
Daniel, where is your vision of this? I know you've been doing some stuff with AWS for quite some time now, and obviously you've seen a lot of this by being in the fintech space and coming from this industry. What are you seeing in the space of the adoption for these types of technologies? And I guess, on the basis of what happened with the Silicon Valley banking system.
Yeah, I think to touch on some of the other speakers' comments as well as Stu's and Jacob's comments, definitely there's that kind of balance between like agility and security. It's very big tension for any kind of incumbent trying to, adopt emerging technology. There's always going to be, risk, compliance, fraud considerations in order to adopt some of the kind of newer emerging technologies that can solve some of the challenges. There's the kind of component of having that the luxury of the existing profit pool and the kind of shareholder base that they have, kind of have that expectation of being profitable. So I think there's probably some risk appetite considerations there as well on whether you should move quickly in some of these things. And in terms of like Silicon Valley Bank driving sort of change, potentially it doesn't impact much to Australia just because of the way the fractional banking system works here, like the capital adequacy requirements. It wasn't sort of as much of an issue versus the US, but I can see definitely more in the US market that there's changes, more sort of rapid structural changes there just because of that whole incident. But I think in Australia, the banking system looks a lot more sound than the US, and that happened in the GFC as well, where you've got those subprime mortgages collapsing in the US, but in Australia we're kind of lucky to be relatively unscathed from that.
Well, yeah, like I guess, on that topic, it's kind of like, a lot of people say it's a very conspiracist thing about people talking. I'm sure lots of people that are listening in, and you guys have seen this on TikTok and Reels and even LinkedIn, people are posting about it and talking about the dollar collapsing in overall, like the dollar, not just US dollar, but just in general. And banks closing forever, and what are the next steps that people are going to take? And I see this everywhere, and the news is talking about it. It's like all over the AFR, some articles are talking about it. I don't know if you guys have seen that, or if you've seen information about banks closing forever and the dollar disappearing. If so, do you have any insight or, I guess, anything you want to share around those types of content that's been posted around on social media?
There is also a giant meteor that's headed towards our planet and is going to destroy the planet in 76 days. So, there's a bunch of people running around saying the sky is falling in. I think for Australia, the banking system, I think as Daniel mentioned before, is pretty well capitalised, and we have capital adequacy requirements and a bunch of money that's held in reserve. The standard that supports the Australian dollar is pretty strong. So, Australian dollar will fluctuate against other currencies, but I don't think there's a chance of the Australian dollar ever collapsing. US dollar, the same, some of the major currencies the same. What you do see, though, is a run on certain sort of other peripheral currencies. So if I'm in Argentina right now experiencing ridiculous inflation and seeing sort of devaluation to my home currency, does it make sense to then move into something else? Does it make sense to move into and embrace a cryptocurrency? Yes, it does. The question there, though, is that cryptocurrency more or less volatile than the currency that you're trying to escape from?
Yeah, I wouldn't. It's interesting. It's interesting because you see it everywhere. I think partly it's just a bunch of people have read Ray Dalio's book and just reiterating some of that. But I wouldn't go against the US. I think this is more of this kind of game is a 50-year long game of a currency collapse and changeover. I don't think it's going to happen as quick as a crypto bull run. But I would say that I probably wouldn't go against the US. I think the US has made probably some poor policy decisions around printing exuberant amount of money. But the US free market ingenuity of increasing productivity and improving the economy is extremely strong. So I guess time will tell.
Time will definitely tell, my friend. I just thought I'd had to bring that up because I see it everywhere and I feel like lots of people are thinking about it and would like to talk about that particular topic. Just to kind of shut down most of the content that's going around on social media. That really brings me to the question of, examples of some best practice fintech companies that are diving into or driving innovation, I would say, in the payments industry. What are you seeing out there and what examples that you can share that's happening at the moment in the fintech space? Before you guys jump on and answer those questions or that question in particular, usually halfway in the session, I like to get people to raise their hand and ask any questions. So I'll get you guys to answer this question. I'll ask one more last question to the panel. And then whoever wants to jump up on stage and ask a question to the panel, please raise your hand so I can bring you up on stage to ask your questions. So just to talk about the topic, the question is, can you provide some examples of some of the best fintech companies that are driving innovation in the payment industry? Daniel, did you want to jump in? Or Jacob?
Yeah, happy to. I think when you talk about fintech, it's quite a broad, obviously, segment. Fintech can be seen as one vertical, but it can range from, I think Stuart talked about home loans before and the innovations that Athena is doing there, to sort of like personal financial advice. So I think it's quite a broad topic. I would say what I'm excited about in terms of the innovation is more of those product-led companies and startups that are genuinely creating a better product for the consumer, whereas potentially, some of the incumbents are really distribution-led. So they're kind of thinking about the customer and looking at, hey, how do we make a bigger margin out of this one particular customer, as opposed to thinking, hey, what problem can I solve for this particular customer? Researching that particular customer and understanding really their lifestyle, their needs. So I probably won't comment on any specific startups, but in general, that's what I would say that I'm seeing in the kind of startup space.
One particular one I'd probably like is Sardine.ai, if you want to check them out. I think even the Silicon Valley Bank, what Stuart said, and I can be fact-checked on this, they might have struggled clearing those payments, but I think it was the fastest bank run to date, and I'm happy to be fact-checked on that one. I'm not 100% there. But what these guys do essentially, increasingly, as payments become real-time, the whole barrage of new issues come. Say, for example, a very fast bank run, or what these guys do actually is monitor fraud and look for bot mouse clicks or what that may be. Because as payments become real time and it's crypto particularly, you might not have a protection of a card company. So they help obviously reduce fraud and increase conversion.
On top of that, we always talk about the companies that are doing well in fintech and the technologies that are changing the way fintech works and so on. What I see, particularly in blockchain and those cases, is that those technologies go and underpin the actual core banking and how it works, and that's why it takes longer for them to penetrate. On that note, do you have any views around how long this transition will take, as we talk about 50-year cycle of replacing money and so on? But in terms of people who are putting their time and effort right now in blockchain or any incoming upcoming technologies like AI and all of that on the applied layer, how long they should be prepared for before their product actually starts showing some results? Anyone?
I think it's hard to call. I think with I think you'd be looking the 5 to 10 year range. It's hard. It's definitely hard to call, but building early, timing is always probably the hardest piece. With blockchain, I see the unlock being stablecoins and CBDCs pushing mass adoption. From then, you'd have kind of multi-railed wallets to what we're talking about before, which would tap into, say, local real-time systems, but then also crypto systems where you can store your assets, store your identity, and all that. So there's a bit of a regulatory requirement there. AI, that's just getting started, it seems.
Yeah, without trying to dodge the question, I agree with Jacob. I think it's hard to call. What you'll see is that there'll be things, typically will be a bit slower for there to be an uptake, and then you'll see a pretty rapid adoption or a pretty rapid expansion. Looking at sort of some specific examples and spaces that are starting to get interesting is I think open banking is a really interesting space. I've been involved in the open banking space for about sort of 5 years and sit on the government's advisory board for it. And the traction that we've had to date in open banking and the consumer data right more broadly is to be honest and candid, is underwhelming, or at least not meeting the expectations we might have had 4 or 5 years ago. What we have seen, though, is that there's a few things that are combining and coming together that then make it really interesting. So consumer data right is currently sort of one way, which is read access. So you can share your data and a company can access your data, but the ability to be able to then initiate actions is just around the corner. So that's sort of read and write access. You combine that with NPP and all of a sudden you've got something where AI is then able to move your money around for the best deposit, or AI is able to move your money around for the best payment vehicle, for the best exchange rate to get your money from point A to point B. Now, whether that's going through foreign exchange or whether that's going through a crypto exchange, it doesn't really matter. But all you need to do is say, achieve outcome X for me, and then something will happen in the background. And the consumer data right in open banking is not too far off having action initiation enabled. And that will then, I believe, be the real trigger for a massive uplift in use cases that are different to sort of the existing products and services that exist today, and we'll see a bigger uptake that's happening in the CDR space.
Got it. And I think one thing that is interesting from my side, what I understand is the AI has now come to the applied layer, which was more infrastructure and data science. And those layer now, people are seeing the firsthand how they can utilize the AI. It's becoming more interesting as well. And I'm very curious how that can affect fintech as well, because when you have those applied layer of AI, it's not just about interacting with the system, but
Yeah, I can chime in there as well. I think it's sort of, there's this question of kind of bottom up or sort of top down innovation in terms of kind of helping, consumers make better payments or, get sort of a fairer financial
system.
Sorry, I think I'm getting...
Yeah, no. It's not you, Daniel. It's Prashant. His Wi-Fi is pretty bad where
it's
it is.
me.
Keep
Sorry.
going.
Oh, no worries. I can keep going then, Prashant. Maybe your connection might be...
I'll just move him to listening for now. Yeah, keep going.
Yeah, awesome. I was just going to say, I think the idea of, decentralized finance and having kind of this internet native protocol to sort of move money around, obviously is, quite appealing. But then again, even in the more sort of the traditional banking system or regional systems, like Stuart said, there's, innovations there as well in terms of open banking and CDR to kind of standardize, the way banks expose data, and even like Stuart said, instead of just having write access to initiate payments and so forth and sign up to financial products and things like that. So it's almost like these two parallel streams of innovation coming together and trying to sort of solve different challenges in different systems. And ultimately it comes down to like a network, and a network has participants within it. So you just have to make sure that you get as many participants as you can. And even in the blockchain world, you do have like cross-chain incompatibilities and so forth, different rails, even in the new system, right? So I think there probably needs to be some consolidation. The best solution will probably win at the end, but I sort of refrain myself from making any predictions just because in the past I've kind of been like probably a bit wrong, but maybe directionally correct, but in terms of making specific predictions is probably hard to say.
I think Daniel's exactly right there, though, in terms of the way that this will evolve is by moving to the areas that are most cumbersome, that have the most friction, that are the most expensive, that are the biggest pain points. And what we're seeing is the velocity at which that change is happening is rapidly picking up. And to bring it back to simple form for financial services and banking, unless you're financially literate, and let's be generous and say that everybody, on this LinkedIn audio is financially literate, but most people are not. I understand how a mortgage calculation works. I understand how a credit card works. I understand the different product features for different payment services. But what about health insurance? I've got no idea on health insurance. Or go to a different industry. Am I on the best mobile phone plan? I've got no idea. All I know is we just pay and usually it works. All of that information is solvable. And this is what the consumer data right does, but also what then a bunch of the services sitting around the consumer data right also do, whether it's in payments, whether it's NPP, whether it's sort of lending bots that can recommend different loans or things like that, is you no longer need to sit there and go, I think I'm getting screwed, but I don't know how, so I'm just going to stick with my existing credit card. You'll be able to go to a service and say, here's all of my data, here's me, here's my last 5 years of life history. Find the best X product and service for me and match it in, and it'll be pretty accurate. And so what that then gets to is the ability for product and service providers to really differentiate will truly be magnified and focused in on, because unless you're able to differentiate, unless you're able to offer the best product or service, unless you have a true, strong value proposition, you're going to get slaughtered. And that's the exciting bit about the space that we're working in. That's the exciting bit about where fintech is headed, is that these value propositions from fintechs are incredibly strong. What's not necessarily there is the scale, but that scale's just around the corner as some automation comes into it, whether it's through CDR, whether it's through AI being able to come over and analyze and make recommendations. And what that does for the average punter is it just takes away a pain in the ass. It takes away something you sit there and go, I pay a tax, which is I'm paying a too high a mortgage rate. I'm paying too much on my foreign exchange. I'm paying too much for my insurance. So because I'm not financially literate, because I'm not going to go out there and get a quote from 40 different providers, I effectively pay a tax, or I pay too high a fee for that. That's going to be eliminated, and that's incredibly empowering for a whole bunch of people.
Yeah, that's Jake. I know you've unmiked. I was just going to say that's so super interesting, and I was just like scratching my head as you were talking, because everything you were saying was quite true. Jacob, did you want to chime in?
Oh, just briefly. I think that's why what Stuart was touching on, why probably the space we work on, just to plug that for a second, open data and the opening of these data sets at banks, insurance companies, pension companies, and so forth is so important. the whole AI run recently kind of shocked me, because the traditional thought around computers and automation is that it wouldn't really disrupt creative work, and that was really the construct for humans to do. But it's kind of gone straight for the jugular, and we see Mid-Journey and these images being created and poems perfectly almost being better written than the majority of humans can do.
But Jacob, just to interject for a second, AI couldn't run this pod. It takes true creative talent to be able to contribute to this conversation.
Oh, definitely. No, I think that's more around just creating. I don't think it's too far off than short movies being created around it, but obviously someone's orchestrating that with the AI as well. But my point was more around these areas that Stuart was talking to, say your finances and stuff like that. You haven't really had the opportunity to receive any sort of solid feedback around that, because these data sets have been really trapped in institutions and not given to the individual. But I agree with your point there, Stuart. Definitely.
Sorry, tongue was certainly planted in cheek on that, Jacob. I was just taking a cheap shot.
No, I couldn't orchestrate.
It's so true, though. Everybody's saying that AI will take over one day, but I think I did a post about this many weeks ago. The creativity can't be taken or cannot be, I guess, duplicated with AI. I think, human using AI, absolutely, that is a game changer, but AI on its own, absolutely not. But
I think it lacks the context. It couldn't be talking about fintech and payments. It would
just in general. Yeah. But yeah, so I guess is there any other questions, I guess, P, that you wanted to chime in on? Because I know your Wi-Fi is probably back because you're back on stage. Can you hear us?
I can hear you. I'm not sure if I'll stay on for a while, but I just wanted to get a feel of what are the exciting projects that these guys are working on that they want people to know about in their space at the moment.
Yeah, I'm super curious. I'd love to get that conversation happening. There's a few questions that we've got that people are sending through, and there's some questions that we've had the team get together, but I'd love to give you guys the time to maybe chime in on what's going on in your space, in your world, what you've got going on, what are you working on? Share away. Did you want to start, Jacob?
Sure. I guess we're providing a developer platform for accessing data at banks and energy institutions. Late last year, we launched the energy side, and we have a whole bunch of startups and enterprise businesses now starting to build and ideate some really cool stuff, and really using cross data sets. They're both using banking and energy data, whether that's for solar panel financing or analyzing home usage to ensure that things are working. Yeah, quite a bit going on there. So it's an exciting spot to be in, working with the builders.
If I can be really boring and go what Jacob said, I mean, the stuff that I'm looking at that's getting really exciting is consumer data right and where that's going, particularly with action initiation. But also, as there's these massive data sets that are now available, what that is doing, particularly around things like lending. I mean, this is incredibly boring for probably 99.9% of the population, but there's an agri-lender that I'm involved in that I've invested in, and the way that they're using data to make decisions to lend to farmers is 10 years ahead of where any of the major banks are at. It's just crazy impressive. They had zero losses over the last 12 months in a period when farmers got absolutely smashed by flooding. So you sort of just look at this and go, that's just so impressive that the way that people are now able to think about giving money out to both consumers and also businesses, or in this instance farmers, and they're able to sort of make credit decisions around that, is way beyond anything that I've seen before. And then I think also just the way that payments is headed, and as we've sort of been talking about on this call, I think that's exciting too, to be able to then see the the convergence of payments with open data and what happens with energy, what happens with telcos. I think that's exciting when you start to see whole economy impact.
Perfect. Daniel, did you want to jump in?
Yeah, I think just chiming in with Jacob and Stuart, yeah, I think open banking is quite exciting. Just, I think Stuart sort of articulated pretty well. Lots of new possibilities just from that trend alone. In addition to kind of market development trends like open banking, I've been looking at more the technical trends as well. So things like generative AI and what the impact there is, even networking, right? And having like low latency across different kind of jurisdictions and regions, compute modernization, a lot of the more kind of technical pieces, and obviously blockchain as well is quite exciting in terms of the scalability and security incentivization there. So yeah, there's a lot to be excited about, I think, in fintech, both from a business, commercial, market development point of view, but also from a technical point of view around how the industry can adopt some of these newer emerging technologies.
Yeah, absolutely. I think it's such an exciting space to be in, and I'm really excited to see this journey through, especially with the emerging new technologies and how that will map out for the fintech space in general. And even just what Stu was saying, just understanding consumers a lot better, especially Gen Zs. These are the new consumers that are coming out to buy these digital products, within the fintech space. So really excited to see that kind of data as well. I guess there's a couple of people that were raising their hands before in the audience. If you'd like to jump back up and raise your hand, we've got about 10 minutes left if anyone would like to ask any questions to the panel. Please raise your hand now, and then I'll let you up on stage to ask your question. But I guess in the meantime, here we go. We've got one person. I tried to let a few people up before, but it wouldn't let me. But it's allowing me now. Yes, we've got it. Mr. Suleiman, if I pronounced that right. Unmic yourself and ask your question to the panel.
Hi, hello. Yes, it's Solomon. You got it right. I want to ask, how do you see CBDC fitting into this? Where do you see CBDC going?
I'd see them as inevitable. I'd differentiate this. I think there'd be CBDCs and private stable coins rolling out. Each country's kind of doing their pilot project. I think that is inevitable. What I would see it being another rail, and potentially a very disruptive rail for cross-border payments. There are benefits to local real-time payment networks because pretty much majority of countries are doing that locally as well. I don't necessarily see CBDCs, say, disrupting UPI in India. But I think increasingly where that goes is that if you can move assets globally, I think the more interesting thing there is the actual asset rather than considering it a currency, although international transfer is currency. I think there'll be a fight between how that structuring happens, whether it's centrally controlled or private, say, bank-issued countries, currencies. And then also, I think you have a good example from Circle in the US.
Did anybody else want to chime in on that?
Yeah, I think maybe just for calls at home, a central bank digital currency is sort of what we're talking about here. I think this gets really interesting in the sense that it's a bridge. It's if you're thinking of investing in or holding a particular coin, the question is, how solid is that? How solidly is that backed? Will this stand up? What is it that how much volatility is there going to be? Less so for investment purposes, but more for spending and exchange purposes. Having a central bank do that then sort of stands behind and sort of supports the current, supports the currency, much like a a dollar or whatever it is going to be supported. So that could be a way. The challenge with that, though, is that central banks to date have been incredibly conservative and are a little bit reluctant to sort of plan the space. But I think it's something that will evolve pretty quickly over the next few years.
Thank you so much, boys, for answering that. Thank you so much for your question, Mr. Solomon. Stu, did you want to unmic and ask your question?
Yeah, thanks a lot. I've just noticed there's like this new standard ISO 20022, which like lets payments instructions have a lot more like data and context included in them. Just wondered in the fintech community or like, addressing payments generally, like you see this is a big opportunity to create new business and innovation.
Yeah, I think for me, that's just another kind of example of standardization that's happening in the industry. So similar in Web3, where you've got, potentially like Ethereum, ERC standards as kind of a standard technical layer for sort of systems to talk to one another. I think the ISO standard is a really good kind of positive sign that we're sort of moving in the right direction, and there's sort of some standardization around how payment messages are communicated to different banks. I think there's still some kind of customization that each individual participant in the network can customize it for. So, you probably won't see like a utopian interoperability just yet, but I think it's moving in the right direction in terms of just having a standard rail.
Stu, I'm not completely across some of the additional data fields, but I definitely think so. Increasingly, we see people tapping, say, open banking data with the payment to really get that enriched information about what's going on traditionally, and that data hasn't been there.
Yeah, I guess I didn't want to geek out and call out like a specific regime, but it's more like the change is acknowledges that you can share a lot more intention of a payment with this change, and it's kind of forcing the payment system to include more context, making safe, include contracts and things with the payment. I just think it's a pretty cool change.
Yeah, but that also gets to some of the challenges it touched on very, very early in the call around banks pushing back now around fraud and wanting to slow things down. If you can now show intention, if you can show support that this is a legitimate transaction, that helps remove friction because the transaction can just be pushed through. Given the powers that we now have around AI and machine learning, that should be a pretty rapid adoption and pretty rapid assessment as well. So that's it's not as if submit payment request, submit contract, wait 3 days for Georgian accounts to review. This should happen instantaneously. Apologies, George. I can see you're also lining up for a comment as well, and I'm pretty sure that's going to be a muckraking addressed at me now.
Thanks, Stu, for your question. Appreciate it for jumping up on stage. Raleigh, did you have a question? Do you want to unmic yourself? Rayali, are you there?
Yeah, hi. Can you guys hear me?
Yep.
Yeah. Hi. Actually, during the conversation that you guys had, I saw a couple of important points probably that could be highlighted. One, payment on rails. Second, the networks. Third, I think important factor that we're looking at is CBDC, the networks, the payment on rails, and the regulatory. How do you guys see? You've seen coins failing altogether to create credibility for themselves. CBDC might find some place, but with so many stacks coming over, how do you see regulatory overview on those stacks, other than just payments and payments? Because you have asset class products, liability class products, payments as products, and processing as products. So some comment on that space would be a great insight.
Yeah, I think it's a really tough one. I've sat in particularly in Australia, the asset mapping, and I think that's a constant debate, and the process around that I don't really know how that ends up, but there does seem to be a push around it. You can see Gensler getting pretty well hit in the US Senate recently. But yeah, I think they'll end up being a direct mapping. The problem with digital assets at the moment is they are extremely broad. Where you probably end up seeing that is actual different protocols. Say an EIP protocol for an asset class is the way I would see it rolling out.
Did anyone else want to chime in on that before the next
There's
question?
still a lot of unanswered space there, especially when CBDC comes in and when you look at DCC applicability on them, and that is for cross-border, but domestic payments also in terms of matching CBDC versus the localized currency and the domestic and international currencies put together. I think there's a lot of scope in terms of regulatory intervention to give value protection to the payers or the receivers or the consolidation, clearing, billing, settlement, and things like that.
Yeah, I think.
I think that's.
Go check it. Oh yeah, I think it's really comes down to that standardization point. Again, it's like a really big question mark around how it all fits together. I think you probably need to segment out different sort of use cases, different sectors around how the technology should be adopted. Like, for example, in Australia, it's kind of retail and wholesale, or institutional. It's quite separate in terms of how the industry thinks about it. And then, with the wholesale segment, the central bank's actually trialing 14 different use cases around how the technology can be used. And that spans from, capital markets, kind of asset tokenization type use cases to, more, settlement, and even, kind of our retirement income system and superannuation. So I think, there's no probably silver bullet on that one. It's just needs to
Absolutely,
be
Daniel. I agree. I think that is where Web3 does not give the confidence of
Rayali,
consolidation.
sorry to cut you, but we're just really trying to get to the last two questions. If you guys want to...
Sorry, Brenda, we can connect. Thank you so much.
Yeah, if you want to connect with anyone on the panel, feel free to direct message them a question if they allow to, and they can answer. We're just trying to get through the last two questions. We've got like a few minutes left before the end of the audio. Thank you so much for your question, Rayali. George, did you want to unmic and ask your question?
Yeah, sure. I'll make it quick. Hi, everyone. George from Ayla. So we are building the Copilot for personal finance, which combines that CDR and AI together. But my question is more towards in the AI time that's coming up, that we actually see that everyone will have their own personal AIs. And the question is, what do you guys think about what currency and payments should AIs trade with each other when they become not a co-pilot but an agent to represent their masters?
Awesome question, George. I don't know. I suspect AI will determine that for itself. But it gets to a real sort of interesting space then around what guardrails should we be putting around AI, and what limitations should we be putting in place? Or, conceivably, is it possible that AI would create its own currency and then it would trade with itself through that sort of means? I mean, there's a whole bunch of things that at a greater sort of more meta level need to be determined around the rules and sort of governing kind of ethos for how that should work. But I think that's I don't have the answer, but I think that's an excellent question. Also, just as a shout out to George, apart from making fun of him and saying that he was in accounts before, George runs a business that absolutely is in the intersection of CDR and AI, as he sort of touched on. And it sort of points to the type of thing that is happening in the space where you can help consumers be more financially responsible, get better financial outcomes through using their data and putting just some smart sort of decisioning over the top of it.
George, I'll try to answer your question. I think the AI will trade as its base currency in whatever country that model was created. I could see OpenAI just trading as default country in USD. I would see them regulated by the US government around it. And if that scaled it large enough, I think there'd be enough incentives for them to default to that. And you could see the same popping up by other AGI models in different locations of the world.
Yeah, that's an awesome question. That's a really, really great question. It had me thinking. I actually clapped when he was asking the question because it's an awesome question. Daniel, do you have anything that you want to chime in on that question?
Yeah, maybe the AI can help us predict the future. Yeah, ideally it would sort of have like a international maybe standard, but I can see like Jacob's point because the AI will probably be a personal assistant, and it should be really driven by kind of utility and like what the customer's kind of lifestyles might be. So it might end up being quite fragmented again with different sort of regions having different customer needs and different kind of customer lifestyles.
My point was more so a thing where it's actually created by the developers and the company is incorporated.
Okay. Understood.
That'd be my take.
Yeah, but good answer, Jacob. I think it will default based on the country that they create it, right? That's what would happen from the get-go. But yeah, really, really good question, George. I hope that answered everything. George? Oh, he's on mute and then unmute. Cool. So thanks for your question. Abhishek, did you want to go next and ask your question to the panel? And this is the last question of the night.
I'll do that for sure. Thanks, Belinda. Okay, so everyone, my question is around the same topic, CBDC, because I see this is the next big thing coming in future. Okay, so see, we are living in the age wherein all the countries, every country is thinking of launching their own CBDCs. And CBDC could undermine both the foundation and future of financial markets by reducing credit availability, disintermediating banks, and challenging the risk of crypto. So if each and every country they're thinking of CBDCs, is the crypto should we just forget the crypto? Is it a threat? Should we just do away with the crypto? Should we only think about CBDC even if it is not in the country? In the future, we should park our investment, our monies. We should not advocate about crypto and then only think about CBDC, because this is the only thing which will be recognized by the countries, and that could ensure that our money is safe.
It's a tough one. My take, I see a kind of political, ideological war probably playing out there, and where obviously there needs to be some regulation around it, and that will be good for the crypto industry. But then there's also benefits to having autonomous smart contracts that don't need to potentially fall under scrutiny and government watch is probably the core political issue there around how much oversight does the government have. But that's to be played out. To me, I will probably prefer the private companies, again, like Circle and USDC. They're doing quite well. Probably if they get enough distribution, they could have a potential run at making a shot at it. But you can see banks and CBDCs competing with them in the next few years.
So there's still a gray line, right?
Yeah, but I think the regulatory line is like, are you allowed to interact with DeFi contracts, or is there now like a regulatory approval process for every contract you can interact with? And that makes issues now, because now developers can't even commercialize solutions without having to conform to regulatory sandboxes. And whereas the free market might just keep running with it, and then I don't know, there will be a collide between the free market and the regulated, or where the regulators land, I guess.
Yeah, that question came up a few times. It's really hard, but yeah, thank you so much for your question, Abhishek. I hope that answered some of your question. We are 6 minutes past the LinkedIn audio end time, so I am going to wrap it up for the night. Is there anything that the panel would like to lastly say or leave the audience with anything? If not, that's okay as well. Jacob, you had yourself on mic.
Nothing else to really add.
Did you want to sing for us maybe? Like a bedtime? I'm kidding.
I don't have time.
I want to hear Jacob sing. I want to hear Jacob sing.
Thank you, everybody.
Oh, God, he was actually going to do it.
No.
Thank you so much, everyone, for chiming in on this amazing LinkedIn audio. We are trying to do these every fortnight, so bear with us. It's so hard to get guests on the show every fortnight to be consistent with this. So I thank Jacob, Stuart, and Daniel for jumping on this LinkedIn audio session. Thank you so much for your advice and answering all the questions. For anybody that has any additional information or any questions they'd like to add or ask Stu, Daniel, or Jacob, blow up their DMs. They will be waiting for your questions. And thank you so much again, everyone, for joining the LinkedIn audio. Bye for now.